Okay, yeah, good heads up. Yeah, you can hear me now, I think. I apologize. I forgot to take myself off mute. And hello again. Hello, Jamal. Hello, Midzi and SB. Hopefully I'm pronouncing your name correctly. We will get started in 1 minute at 9:02. We will get started.
Hey, what's up, Millionaire Greg? How everybody doing?
Hey, Jamal, how you doing, man? Good to hear from you. How's it going?
I'm okay, brother. Good to see you.
Good, likewise. Good to see you as well. We'll get started in just a minute. All right, let's get this going. Cut my music. Can y'all hear that, by the way?
Yeah.
Okay. Okay, good evening, everybody. Thank you for getting on the call. We are going to get started right now. For those who I have not met, my name is Greg Whitmire, and I've been doing this Friday evening smart money fundamentals, institutional trading session for a couple of months now, maybe a little bit more. And the point and purpose is again just to talk about some fundamentals. I'm sorry, I'm gonna have to mute folks. Yeah, just to review some fundamentals associated with a particular style of trading. I'm not sure how long each of the people on the call have been trading, but if you're new, please bear with me. Some of what I go over just may require a little more understanding of a few fundamental things, but nonetheless, I think it's good to kind of plant the seed for whatever style of trading that you eventually find yourself comfortable with, that you can remember some of this institutional concepts, because they work across the board. And I think it's a good idea to really start at least getting exposed to some of these concepts early on in your training. And like I said, it will support any style of trading, as I'll demonstrate in a minute. But let me get started. Always on these sessions, because again, I don't know exactly where everybody's at. Oh, like I said, I'll introduce myself. But yeah, I've been doing this for several months, but I've been trading here in the DMV area for more than a year now. And wow, I mean, you know, shucks, I guess the fact that I've been doing it for a year now kind of speaks volumes to how much this has been of, well, let me just put it like this. this experience has exceeded my expectations for everything that I thought I would get out of it. When I walked into that first information session meeting and, had my arms folded because I really didn't want to hear anybody tell me about my finances because I thought I had it all figured out. Well, on the surface, I wanted people to believe I had it all figured out, but I didn't. And there were some serious questions about my finances moving forward into my retirement years, etc. And I just listened. I gave this a chance, and like I said, and again, not trying to pat myself on the back, but I am a real student of this. Okay, so I am that person who attends, spends several hours a day, typically in the either reviewing sessions or if I'm not in a live session with my mentor, I will be in a recorded session trying to, again, just continually trying to sharpen my skills, trying to sharpen my understanding of this skill set. So, and again, it's nothing unique to me. If I do it, you can do it. But that's the formula for me is repetition. Practice breeds confidence, and in that confidence, I can go in these charts and I can identify setups and do so both consistently and profitably. If I'm saying that right. So welcome everybody. There's a few new people getting on the call. I'm just muting people as I see them come on. But anyways, welcome to the call. I was just introducing myself. So I'm going to move now into the where I want to get started. I always talk about mindset. This has been a journey where I have realized that the technical skills associated with trading. There's technical skills associated with trading, and then there are the the soft skills that are associated with trading. And what we're going to talk about first. Hang on one second, guys. Let me. Wow, what's going on with the camera? Oh man, see that flicker? Hang on one second. I need to log in on my phone as well so I can see. Come on. Okay, I just want to make sure that what I'm sharing is what you guys see. All right, so what we're looking at here, we're looking at some fish. You're like, okay, what the heck is this guy showing me fish for? I talk about this every time I get on the air because it is extremely valuable to have this understanding of who the players are in this market. And again, if you haven't been trading long, again, you may have heard it before, but it helps to hear it again and put some what do you call it? Put it in context. I guess that's what I'm looking to say. Yeah, to be able to put this in context, who you are in relation to the market. Now, on the IML Academy, there's a video that talks about the market participants. And you have to really, I know I didn't take it in the first time. I mean, I heard it, I reviewed it, but I still didn't, they identify who the participants are. And they identify a couple of participants that they identify certainly are hedge funds, you have big banks, you have governments or other large institutions that invest in the currency market, big banks that invest in the currency market on a daily basis. And they invest, like we all know, this is a $6.6 trillion a day market, all right? So when we open our $200 accounts, our $500 accounts, our $1,000 accounts, our $5,000 account, that is just, I mean, it's a fraction of a fraction of a fraction of the total amount of transactions that take place during the course of the day. Like I said, just think about, quick math on, $500 account versus, up against a $6.6 trillion a day transacting through the market. And we get, I hate to use the word retail traders, but I'll say that for now. But as retail traders, we are trading in lot sizes that are proportionate to our account, which is what we should be doing. But Needless to say that those other players, those hedge funds, those big banks, those large institutions are putting in lot sizes that you wouldn't even, if you're a new trader, you wouldn't even have can't even approach the imagination to know that they're putting in lot sizes, $100, $200, $500, up to I think the limit is like $1,000 lot size or something. But that's how they play. Now, I show this picture because this picture I try to use as a representation of what I just explained. The shark in the picture is supposed to represent those big banks, those hedge funds, those large institutions, and they control the waters, just like the great white in the picture. The sharks control the water, okay? And if you get in a shark's way, you become food. You get eaten. Your account gets taken or diminished. Okay, it's the harsh reality of this market. It is no game. The market is set up to take your money. It's set up to take my money. Okay, and that's why you have to be careful about how you learn and where you learn, because again, you can learn in certain ways, certain patterns that again just set you up for your account to be taken, and you continue to have a succession of getting stopped out, et cetera, et cetera, et cetera. But anyways, alongside of the sharks, you see these other fish. These fish are called pilot fish. And again, this is a true act of nature. The pilot fish swim alongside the sharks, and they do that for their own survival. They swim left when the shark swims left. They swim right when the shark swims right. They go up, they go down, you know what I'm saying. But the most important thing in relation to the survival of those pilot fish is that they eat when the shark eats. And we have to train ourselves as traders to do the same thing. We have to dump the mentality of retail traders and adopt the mentality of a bank trader. You want to learn how to trade like the banks. So when the bank eats, you eat. And that's what we're going to talk about in more detail tonight. Okay, like I said, the 10% soft skills, or 10% psychological, 90% psychological, 10% technical skills. The technical skills are the easy part. This right here, discipline, not so easy for a lot of folks, but you have to have discipline as a trader. It's no way around it. And I'll demonstrate in a minute when I get to the charts how important discipline is and how discipline is represented in the market. But we're all adults. So we all have had opportunities throughout the course of our life, no matter how old we are, to practice discipline. In some area of your life, you've had to practice discipline. And if you're like me, you've realized the benefits of practicing discipline. You started practicing discipline for a particular reason, to accomplish something. You wanted to do something a certain way and get a certain outcome. It's the same thing with trading. You want to do something a certain way, in a repeatable way, in order to get the desired results. And that is through the use of discipline, not being all over the place. Faith, that's something else. Like I said, we're all adults. We have opportunities to practice and develop our faith in a number of areas. We have, clearly there's, spiritual faith for a lot of people. There's emotional faith. There's, faith in others. There's faith in ourselves. Again, faith means a lot of things to a lot of people. But in the area of trading, I'm talking about faith in yourself, and faith that's developed through your steadfast study, your eagerness to learn, to absorb these skills and techniques, and then have the faith to move forward and execute trades in the market. And you will see that you will get the results that you want. Patience, that's something else. Patience, this is a cliche that I've heard. I'm sure you guys probably heard it, been around in any amount of time. But the cliche is patience pays. And I'm not a big fan of cliches. Well, yeah, I guess I am. I'm saying I am a big fan of cliches. But it's just so many of them, But anyways, patience pays. And I have example of how patience, the ability for me to apply patience in the market. You know what? I'm talking about all this stuff and I'm not even sharing it. I am so sorry. Let me see. I'm going to Okay, I'm sorry, guys. Let me just at least just show you what I was talking about. My goodness, I'm not going to go back through all the verbiage and bore you to death, but that's what I was attempting to show here. And I said I was setting up my phone so I could see what y'all see. I didn't even look over at it. I apologize. So, like I said, we just talked about the need for discipline. We talked about the need for faith. And then I was just talking about patience, and patience pays. And it is a true fact. And just like I said, all of us throughout our entire life, you know, for some reason or another have had, I mean, every day we have to practice patience. You just had to practice patience with me right then because I didn't have up the right slides that I was talking about. So you're probably standing there scratching your head like, what's wrong with this dude? But again, you apply some patience. I caught up with myself and now, you know, we're back on track. But again, patience is involved in everything that we do. So your ability to apply that soft skill of patience to the chart is going to benefit you tremendously. But again, those things that we just went through, patience, discipline, patience, and faith, there's no module on that within the IML Academy. There, you know, certainly the educators talk about it here and there. Why's my face jumping in the video? But anyways, but again, we got to talk about those kind of things. So like I said, I just wanted to always like to start out touching on those things. Now let's just move into the markets. I got one chart that I wanted to take a look at, and let me make sure that I am sharing that. Let me stop sharing that and share this over there. Should be coming up momentarily. Okay, great. All right, so you guys can see my screen here. I'm gonna start out. I was looking to see who's on the call. There were a couple people who shared a trade with me the other night, and I wanted to just kind of talk to the. I mean, they would know, you know, have a real intimate understanding of what we got into. But I'm gonna share it anyways, and whoever's was in it, if they're on the call, that's fine. But I did want to talk about a particular trade for EURUSD. If you've been on the call with me before, you know that's one of my favorites. That's I trade this pair a lot. And something else that I guess one of the suggestions to me very, very early on was to what they call marry a pair. You know, in other words, you know, find a pair or find you know, a couple of pairs or 3 pairs, 4 pairs, whatever you like. But, you know, find a couple pairs that you can develop some understanding of. And it didn't come to me very quickly, I guess, you know, to really understand what they were talking about, how they were, you know, how they were doing that and that kind of thing. But again, as I stuck around and continued to stay plugged in, I found my way to where I realized the pairs that I was comfortable with trading and wanted to understand, and basically can trade this pair anytime I want to, and usually pretty successful. But what I'm about to share with you all was an exception to that. And here's the thing that I encourage everybody to not be fearful of losing in this market, because you are going to lose sometimes. That's just the reality. You're going to lose trades, and you really have, as you develop, you really have to develop the skill, yet another skill set that I'm talking about, another soft skill set, that you learn how to not be emotional about your money, because that's going to stop you from trading. If you are emotional about your money, if you're going to panic every time that a trade goes into the negative, you're not going to last here very long. And I hate to say it, I'm not saying it to minimize anything, but keep in mind, it's only money. It's only money. It's like my connection is going in and out. Hey, Jamal, I'm gonna ask if you could kind of maybe just police me on that, if you don't mind. You know, just unmute if I'm having any problems, if I go out or something.
All right, you clear.
Okay, thank you.
All right.
So anyways, yeah, so again, I'm just touching on that as well. Again, just developing, and that's something you develop. Well, it's something I had to develop. I can only talk about me. Maybe you guys will come to the market and be a lot quicker to embrace that. But I know for me, in the very, very beginning, it was a struggle for me to stay in a trade, because unless the trade went, you know, almost immediately into profit, it was difficult for me to sit in that trade and to really understand that there is a process. There's things beyond my control going on in the market, and that I had to trust. That's where that faith comes in. I was talking about earlier. I had to have at that point a lot of faith in other people, because I wasn't developing the trades. I was receiving. I was being fed by those educators, those wonderful educators who I'm very, very thankful to, were feeding me. Like, if you're just getting started, many of you all are getting fed through, trade ideas that are shared in the Telegram. And again, I know you don't understand how all of them are developed, et cetera, et cetera. And then based on what you see, because a lot of times then we're just looking at our phone, we're looking at the money go up and down, or looking at, I used to hear people tell me, well, I'm looking at the candles. Well, unless again, when you develop an understanding about, candles and price action, that's one thing. But when you're brand new, you're looking at the candles. And again, I say this with all love, you just don't know what you're looking at. So at least what I'll say for me, I just didn't know what I was looking at. Maybe you guys, if you're new, but you follow what I'm saying. This is something that you just don't get in a couple of days. But anyways, so here was the trade idea. Let me write it out, and then I'm gonna just explain it. And then as I'm explaining this also, we'll be talking about the way the trade idea is developed is a good example of smart money, of institutional trading. So I'm just going to, the other thing, let me just cover this, because again, if you're new, I am using right now, this is TradingView. TradingView is a platform. It's free, has a free version. This is not the free version, but there's a free version, and TradingView is a platform that where you can just look at charts. Okay, it's very, very helpful, and very, very helpful in conjunction with the harmonic scanner. For a number of reasons. I don't want to get into all of them right now, but needless to say, if you haven't, you can subscribe. You can open an account with TradingView. You can download it to your phone. That's the other thing. You can download it to your phone. It has a lot of tools over here, which again, we're not getting into this session. Maybe we'll do a session on some of the tools, but you have a lot of tools over here on the left-hand side that allow you to do things like set alerts. You can, just pull little lines into the chart. And that, again, all this kind of helps me just establish visual cues, so I know where I'm at in the market. I know, as I'm developing the idea, or I'm looking at the opportunity that may develop, again, I'm just placing little markers. The lines that we put in the charts, you'll see people put trend lines in the charts. You'll see people, well, I just put it over there for clarity. But you see people put trend lines, and that like represent areas, and waiting for price to move to areas of support or break the trend line, or this, that, and the other. I'm just saying it because, again, for me, when I was new, I guess it helped that somebody told me. It seems so obvious, but it helped that somebody actually told me that there's no magic to these lines. They are just lines that people put on the charts, and they have no bearings, no significance on price or price action or anything like that. They are simply visual cues that help us as traders identify or just kind of mark up charts, etc. So that's anyways. Other thing I want to just say about TradingView as I move through this. If you don't know how TradingView is set up, and the same thing with the harmonic scanner, you have different time frames along the top here. If you see my mouse, I'm scrolling across the top left-hand portion of the page. The far left is the pair that's identified EURUSD, and then as I scroll to the right, I'm just tapping on or scrolling past each of the charts, and each of the charts represent price action for a specific time frame. The time frame we're looking at now is the 1 minute chart. And just for reinforcement of information, I'm sure a lot of you already know, but each candle on the 1 minute chart represents 1 minute. Each candle on the 5 minute chart represents 5 minutes. Each candle on the 15-minute chart represents 15 minutes, on and on and on, up to like the day chart, where every candle, of course, represents 1 day, weekly, monthly, the same thing. Okay. So I just kind of wanted to, sometimes I over explain, but hopefully it's of some value to somebody on the call. All right, so back to the setup, and like I said, I'm going to be talking about the institutional concepts as we move through this. So what I'm looking for anytime that I'm in a trade, I'm looking for two things. The first thing I'm looking for, I'm sorry, three things. The first thing I'm looking for is the market trend. We're going to touch on each of these, but I just want to put them out, get them out of my head. The second thing I'm going to be looking for is search and destroy, opportunity for search and destroy. And let me put in parentheses. This is areas of liquidity. Whoops. Pardon if I'm spelling anything wrong. I see I got areas wrong, but it's not a spelling test, right? And then the third thing I'm looking for is areas of imbalance. This find an imbalance in the market, and that's the part. These three areas, again, they cross all trading styles. The trend, areas of liquidity. Where can I put it? The trend, search and destroy, areas of liquidity, or areas of area of imbalance, and they're important because this is where price goes. Now, all of us know that price moves in what? Basically like three different directions, right? Price can move, to find my arrow. Price, whoops, that's not the right one. Hold on. Price can move in three different directions. I'm sorry, I'm gonna grab an arrow. Price can move up, right? Price can move down. And then of course, price can move sideways. That's it. That's it, folks. That's the end of the mystery. All right, that's it. So what we need to, as traders, what you're always trying to figure out is where is price going, because of course that's what we do. That's simply put, a trade idea is built on simple. Where do I get in and where do I get out? Where is price going? So where do I get in and where is price going? So in other words, what makes it easy, and where I'm gonna start off with number one. The most important thing is you want to know where is price going. Price, 9 times out of 10 or 80% of the time, price is going to continue in the same direction that it's going. And that's where it's important to identify the trend. Now, I'm down here on the 1 hour. For real, I need to just step up. I always step up to the daily and the weekly in order to determine trend. What you have down here in the lower time frame really represents market structure. There is trending going on in these areas on this time frame, but I first and foremost want to establish what's the overall trend. So I want to look at the higher time frames to establish the overall trend. So I'm just going to move. It might be a little bit cluttered, yeah, well, since I put that stuff on here, but it's a little bit cluttered up here. But we can see though, and this is why, again, I don't use typically a lot of lines and such because it's really not necessary when you think about it. We can look at this market and see that this is trending up. Let's just change the colors, make it stand out a little bit. Oh, did that help or work? But anyways, you guys can see that purple line there. We can see basically that price is trending in an upward direction. Okay, so I just take that information, put it in my little, bag of tricks and move on. So that's one piece of information I collect. Oh, let me say it like this. Analyzing the market is very similar to driving. And I say that, I use that comparison because when we're driving, we're constantly taking in information and making adjustments. And albeit many of us have been driving a very, very long time, and a lot of those adjustments that we make or the information that we take in as we're driving, it just goes to the subconscious because we've been doing it for so long. And again, as you continue to learn the skill of Forex and digital currency trading, you're getting that same position. But that's the thing. The car is moving, the market is moving, price is moving, and you're constantly having to take in information and adjust and to make sure that you reach your destination. Just like in your car, you're trying to get to a destination. The same thing in the market. We're trying to get to a destination, but I need to collect some information that's going to help me get there. So the first piece of information is, again, I want to establish what's the trend. So I've done that. I say, okay, well, it's you know, and again, somebody else could look at this and have a different bias, but just based on the information I have here, that the market is you know, moves slightly upward trend, and it's kind of, we had if we just kind of go a little further back, we can also see that that's justified here, where market went up here. We had this correction in this area. Whoops. We had this correction here. Hold on, I'm just turning this around. Hopefully make it clear. We had a correction, and then price continued to move in a bullish direction. Now, the other thing that's helpful, and I like to look at when I'm on the daily chart, is that, okay, well, how long has that been going on? Because a lot of times that's pretty significant in terms of making final decisions, or again, as we're collecting information. So I can just look at here now, down at the bottom on the chart, this is it shows your date, the date. So again, this is the daily chart. So I can see that price was sharp. Let me do this, because we're getting into some good stuff here, y'all. So we had price moving pretty much accumulation is going on in this area. So we got price pretty much moving sideways. Yeah, this is good. This is good. This is good. I'm gonna do, okay, this is good. So let me grab one more. And see, I said I ain't like to use trends, but I'm bringing these lines in here, and I'm seeing stuff. So they're all like really good for visual cues. Okay, so let's just look at this for a second. We're gonna move back down to the actual how I built that trade idea, but this is helpful. So again, I'm looking at the daily. So this gives me an idea how far this is, what's going on, has been going on, because what happened in the past is very likely to happen in the future. So as I look at this, I can look all the way back to, and I'm on this candle here, just so you know where I'm at. I'm back here looking at this candle right here, because that's some good information. Right here, I have this last green candle. That's a sell. That's a buy to sell candle. This is an institutional candle. Market was pushing up, and then this last candle before the market turned around and then started pushing down. So that's a point of significance. That's a point of interest for me. And where the market has been, the market is going to return to. That gets into when we talk about identifying imbalance. But that's very significant for me as I look back through these days. So when did that happen? I come down here all the way to the bottom. That looks like that candle. This is way back in March. Okay, that this started on a downward trend, went sideways through May. Yeah, through about the end of May, and then started trending up into June, and then we had this correction into June, and then if you notice this is all through from June 30th all into July, where we are the 10th on this last candle. So we're starting to understand, you know, some structure, again, at least based on the daily time frame. And I have to keep in mind, again, this particular candle over here, because I will be looking for price over time to come back into this area. So again, I'm just collecting information. I haven't done a daggone thing yet other than just collect a bunch of information here. I'm gonna keep that, just move this out of the way for a second. So along with collecting information, also what I see, and this goes to number 2. So I've identified a trend, okay, and I'm focused on this last little section for my trend. I'm gonna change the color for that just so it'll stand out a little bit. Okay, so this is what I'm identifying. This market is on an upward trend. I got price has come back into this area. Remember I said a moment ago how where price came from is going to go back to? Let me show you that it already did that. And remember I said this is a point of interest for me, because what's happened is price started out over here back in May, what did we say? March the 9th of this year, okay? And then it took all this time for price to come back into this area. Price has to always rebalance itself. It came back over here, this little wick right here, price went a little more than 50% into this candle. So actually it came all the way up here. Let's go to the top of that wick. Yeah, so about almost about 80% into that candle, price came up into that area and filled that imbalance of that area, okay? And that's what we're always looking for. And some may say this is really like a little teacup too, because you got your bullish engulfing followed by another down close candle, which takes the market down. Market moves sideways and then back up to this same point, okay? That's a teacup. So it's all this information I'm collecting. So I'm over here now. So again, I'm looking to see what's price going to do next. I really have a repeat of that same situation, but what I want to look for to really get to what I want to identify here is what's, like I said, search and destroy. Because I want to know, I'm trying to figure where is price going to go? Where is there liquidity in the market? Where is there an opening in the market that price is likely to go and me stay in this trend, stay in the upward trend? Because again, I'm not going to go against the trend if the market's going up, which it appears as though it is right now. So I got this area up here. I didn't mean to move that line, but I'm gonna pull this over. I got this area up here where I got equal highs, and price didn't come all the way back into this area, but it's a likelihood that price is going to come back into this area, because what is liquidity? Liquidity is basically areas in the market where where there are equal highs or equal lows, and above or in those areas represents stops, represents pending orders and that kind of thing. And like I said in the beginning, we're not alone here. It's $6.6 trillion a day that's trading in this market. So again, and like I said also in the beginning, the market is set up to take our money. So if we trade like the YouTubers, we're going to park our stop losses up here. We're going to park our pending orders up here, et cetera, et cetera, et cetera. And it's going to be, thousands upon thousands or millions of dollars up here. And guess what? The market's going to come up here and reverse and come back down. It's going to come up here, snatch your money, just like these wicks are. Came up here, people buying, think they're going to get in here at the top because they see price moving. And then what does it do? Reverses and come back down. It took your money and then came back down. So we have to be mindful of that and play that to our advantage. So we identified one area of liquidity, and I can look down here for another area of liquidity, a smaller area, but nonetheless another area of liquidity here where we have, it's a much smaller, but again, we have this area here where we have equal lows. And when I say equal lows, they don't have to be, we're not talking about, the exact measurements. We're talking about areas. Everything in the market, we're talking about areas, okay? So these are areas that represent it. Now, the third thing I want to look at, like I said, in a minute, because I want to be mindful of time, we're going to come down and get into the exact trade, but areas of imbalance. I also want to identify areas of imbalance here on these higher time frames, because that's going to help me when I get down to the lower time frames. So what is an area of imbalance? An area of imbalance are let's get rid of this. Area of imbalance are any any areas in the market where price has not traded into, okay? In other words, like I said earlier, or I may not have said, I'll say now, but you need to know one of the rules of the market. And that's why, like I said, learning these concepts applies against everything, because if you understand this basic concept that for every buy, there has to be a sell. For every sell, there has to be a buy. So there has to be a balance. There has to be a balance in the market. And when there isn't a balance, you look for price to move to that area in order to rebalance it. It just has to happen. Now, it doesn't, now when it's going to happen, you know, we clearly don't know, but trust me, it has to happen. The market has to balance itself. Let's do on this daily time frame. Let's do a quick example of that. I'm going to just, and then I want to get away from this, but think about click here. Let's just do this real quick. Okay. So now we're looking at the market. Again, I'm just up on the daily. I just want to prove my point about balance in the market and how it has to take place. So we had all of this. We had all of this selling. I'm sorry. We had all of this buying going on. And actually, it's the shucks. We'll see. This is the example right here. But we had all this buying from here. It was nothing but buying going all the way up here. You had this one little stutter candle right here, that red bearish candle, but everything else is green. It was only predominantly all buying from here to here, right? Everybody can see that. And then you see on the reverse of that, NASA, so that really created an imbalance because there wasn't anything here, obviously. And so what happened is that the market had to rebalance itself and then sell to every area that had only been, sell to only area where there had only been buying from, okay? In the same area, you see the same area, that little stutter candle on that occurred while the buying was going on. You had another little stutter candle in here where the opposite, when the selling is going on. So it had all this selling off going. So let's run. I'm gonna run the replay here, and we're gonna see now that we have. Let me explain it. So now what we have is all predominantly selling going on. Like I said, with the exception of that little stutter candle, there's no balancing of the market. Everything here is just been sold. Okay, some exception to that with these little wicks. That does imply that the price has bought into these, but again, you got gaps here. And let me show it like this. Let me show it like this. This is an imbalance. This is an imbalance. Here, from that body of that candle all the way down to here, because there's been no buying. Now, the reason why, let's get rid of that, move that to the side for a second. And then it's a smaller area of imbalance here. But if you notice, I'm setting these areas of imbalance above the wicks, because where there's a wick, that meant price came into that area. And sometimes it came in sufficiently, because price, in order to satisfy an imbalance, price really only has to come about 50% into that area. But when you see areas that are just like, and this is a perfect one, this one down the bottom, because again, there's absolutely no price, no buying has been into this area at all. Okay, so watch what happens when we run the replay. And these areas that I identified as imbalance, you'll see, even the top area, this top area here is also an area of imbalance. All right. So watch what happens when we run through this. So boom, let's just stop it there. So we see now, we see here where price came in and rebalanced against what was only a selling area. Now we have buying action coming in here and rebalancing. Okay, let's see how far it goes up. Like I said, we just don't know when it's going to happen, but it's going to happen. I'm gonna run it. Now, let's take a note here. Now we see the price came up and rebalanced into this area, okay? And like I said, it doesn't automatically have to fill up the entire candle, but you better bet it's going to fill at least 50%, okay? And I'll show you in a minute why that's helpful and useful when you're identifying targets to trade back into. But you see this area is still open, right? And this area up here is still open. So what does that tell me? That price is going to come back into those areas. It's going to come back into those areas. So when I'm setting up trade ideas, I'm looking for stuff like that, and I know price is going to go there. So let's run it. And again, this is days. Every one of these candles is days going by. It's days going by, days going by, days going by. Now we start seeing price move up. Whoops, I was trying to stop it. Now we see, I'll extend, like before, it hadn't filled this area, right? It hadn't filled this area over here, but guess what? It came and got the rest of it. It came and got the rest of it. It has to rebalance itself. Now, what's interesting here is it moved to the top. This area was open, but price moved into this area just by virtue of this wick, this last little green wick. You see it came up almost to the top of that last green, that last sell candle. But again, it covered itself. Okay, so let's just run. There's not much left here. So again, and you keep in mind everything that already happened, and now you got this area down here that's imbalanced, out of balance. Okay, so we're going to watch that area. That gives us a future area for us to watch. And then that's the end of it. Okay, so now these areas, I'm gonna remove these because we saw that the imbalance was taken care of for these areas. But now what I'm looking for here, I'm looking to see, okay, well, we got now all this area from here to here that's imbalanced. So what's going to happen? What do I look for in the lower time frames? What I've basically done is identify targets for myself. Again, I'm collecting information. I got this area up here where I know the price, it can come up here, search and destroy. Where's my arrow? Search and destroy, take people's money up here. And then I would be looking for a reversal for price to start coming down here and rebalancing the market. Okay, it's going to come down here and rebalance the market. All right, so that's that. So I'll come down here to my lower time frame because again, I'm not going to trade on the daily. I could, but I'm not. Some people do, but I don't. I'm gonna come down to the lower time frames and start developing these trade ideas, and also start looking for where I can get in, etc. So okay, so let me get to what I saw the other day and the trade idea I set up, and where I now know that I fell short in my analysis. So we were looking at this area of the market. So let me see. I was looking at this area of the market. I'm gonna use this again. Let's close that. I'm gonna bring my replay tool into. I guess it was right about. I'll say here. Okay, so I was right about here. So now I'm looking for, every time that I'm coming into the market, I'm looking for, again, I'm looking for search and destroy and areas of imbalance. And the other thing that I'm going to look for when I'm actually at this level, I'm looking for points of interest. Where can I get in the market? Okay, where has price been that it might return to, and then give me an entry to get in? And right away, I saw based on, let me grab this right here. Based on this action in the market, I saw the market go up, okay? I got my institutional candle at the top, and I saw market come down. I'm gonna focus on where did it start? Where was the last sell? I'm sorry, where was the last, sell to buy candle before the market went in this up direction? So I'm gonna find that here. I'm just using my eyes. I don't have to use any indicators or nothing like that. I just look for the last place that the market sold before it, sold before before it went into a buy. And that's this candle right here. Hopefully you can see it. It's this candle right here. That's the candle that I'm hedging my bets on an entry on this candle. Okay. I want price to come down to this candle and then take off to the upside, because that's the last point that price came down to before it took off before. And in most instances, I'm looking for price to do what it did in the past. Okay. And again, I'm getting confirmations, other little visual confirmations, because I can look here in this general area down here. This now looks like an area of liquidity before me, because I got these equal lows down here. So I'm like, price will come down here, like you see all these wicks come down here, snatch, and then I'll get price action. I'll get the reversal that I want off of this last sell to buy candle, and the market should push back up to the upside. So what I did was I put a pending order. I put a pending order in here. I put a pending order right here, okay, at the open of that candle. And my stop loss, because that's the other thing with institutional trading, the idea is that, again, we don't get into these big stops. So I'm going from here. Yeah, I think I did like a 15 pip. Yep, 15, 16 pip stop loss. So right where that red line is, that was my stop loss, okay? And so again, my thinking was, again, my analysis, and it was good analysis except for one thing that I overlooked, that it was going to come down. I'll give myself a 15, 16 pip stop after it blow through that. Because here's why I said, okay, I'm gonna put my stop here, because if price goes past this point, then there's no other resistance until price gets down into any significant resistance until price gets down here. And I'm not going to get caught in a trade where, let me do it right. I'm not going to get caught in a trade where I'm down here. Oh, shucks. Well, shucks, I'm gonna say that would have been like an 80 pip stop, and I'm not doing that. And I suggested none of you guys do that either. Well, 50 pip, yeah, because I would come about halfway into that can. Oh, shucks, I really probably would have come to the base. So I would have been looking at about 55 pip stop loss. Nah, I'm not doing that. So anyways, here's what I didn't see. And you guys may have already seen it. I talked about imbalance and identifying imbalance. Here's what I didn't see. I didn't see this area of imbalance. Okay? I didn't see it. I didn't see it. So what price did, and we'll see in a minute, what price did, it came all the way down. And again, that's what price does. I demonstrated that before. Price comes down and has to satisfy, it has to rebalance itself in the market. So price came down here, rebalanced, and it was from there we see price take off. So I was from my stop loss, I was, I think, 7 pips. Yeah. If I had given myself another 8 pip stop loss, I would have got us in that trade. But again, that's the beauty. That's the beauty. I can look at this when I win. I can look at this when I lose. And I learned so much. I learned so much just from what I'm, sharing with you guys tonight, because again, I had lost sight of a very fundamental skill, and that is to look left. Always look left in the charts. Okay, I was too focused in this area that I'm gonna just shade up. I was too focused in what was going on here and just looking at that, looking for my point of entry, and didn't expand the chart or just didn't eyeball over enough to say, okay, well, what else is going on beyond this point? And again, and plus I probably, well, if I did see it, I thought because there was really no selling, there was no selling pressure against it. I didn't think that it would really run through it, but again, I should have accounted for it, and I didn't. And here's what happened. Let's get rid of this. And here's what happened. Mute. Here's what happened. Let's run it. So I got my entry, okay? Oops. So I got my entry, okay? Because remember, I'm ending on this blue line here, right? So I got my entry, and it happened pretty fast, but actually I got the price moved up in my direction, I don't know, 2 or 3 pips or so, and then started coming back down, all right? And I alerted, I alerted my team. I was like, look, because it was getting late. This was, what time was that? That's midnight. I think I alerted them about 11 o'clock or so. I said, hey guys, look, you guys decide if you want to stay in this. I'm going to stay in it. But I just gave folks a little heads up that, you know, of course we were in a drawdown. You can cut your losses now, or, you know, you can hang in that and, you know, and see, and see if we catch this to the upside. Now, let me throw this in. I got 5 minutes, but you gotta, one of the things that works with, and this is why I like EURUSD, because I look to the DXY, and that's the dollar. And it was giving me confirmation too. Let me just go back to the dollar. It was giving me confirmation. Here's exactly where I was at on that. Let's do this, do it quickly. Here's where I was at with the dollar, again, about that same time. I think this is where I was at. Okay, it was a similar, no, actually I was over here. No, that's too far back. Anyway, yeah, I think I was here. That's the 9th. Yeah, about 10 p.m. Yep, exactly where I was. So here's what I'm seeing on the dollar. And I know on the dollar and the USD have an inverse relationship. So if the dollar's going up, then that means that the EURUSD is going down, and then the reverse. So here's what was happening on the dollar. You can see it for yourself. I saw the dollar going up, and that meant that my pair was going to be going down. I expected it. I was cool with it, because what I also saw was that this was a teacup that had formed. And I said, okay, well, I'm good, because what should happen in a teacup is that price should come back up to this area. And it's at this point, at this area, that it should reverse. And once it reverses, once the dollar reverses, my trade is then going to go in the direction that I wanted to go. Watch what happened. Let's go back to our trade. Let me finish running it. So again, let's recap. I got my entry, and it's starting. I'm in the drawdown, and like I just showed you on the dollar was going up. I was going down, and that's fine, because I saw that there was about a 7 pip. There was about, let me go back to that real quick. Here's what I saw. And see, this is, man, this is why I get so adamant about making sure people go to the academy. Go to the academy and learn from the educators. Learn from Manny Q. Learn from John Dollery. Learn from Abel Melendez. Learn from Kim Torres, Luke Long, all those men and women. This is where I get this level of understanding. And I'm real humble about it. I don't know a squat compared to what they know. But these are the things that I've been able to pick up that, again, 10, 11 o'clock at night, I could see that, okay, I'm in pretty good shape, because at that particular time, I was only about 7 pips from here. And I know in a teacup, what's going on, well, again, the likelihood when price gets up here, it's just going to turn around and reverse. I'm going to get what I want. So, and I was about 7 pips away. And then in EURUSD, I was also about 7 pips away. So, I don't suggest people modify their stop loss unless, again, you really, you know, have a good understanding of what you're doing and why you're doing it, that kind of thing. Don't just move it to be moving it. But I adjusted my stop loss just a little bit to account for it. What I needed to give myself a little more margin, because I saw where I thought the dollar was going, and these things are going to work almost like they're going to match each other almost exactly. So anyways, let's run it. Hopefully I'm not getting too much in the weeds here. So boom, I came down. This is where my stop was, the first red line, and then it came down right here, the second red line. And what does that red line match up to? 50% of that open candle, the rebalance area. Like I said, the market has to rebalance itself, and I missed it. I missed that area of imbalance. If I had just seen it and put my little marker on it, I probably either, if I decided to get into it, or actually now this would have been my entry. This would have been my entry. And this is and again, this is the institutional mindset. So if I get in here, I don't have no drawdown. I don't have no drawdown. I can get into this kind of a trade with a reasonably large lot size, and then boom, take it up here. Well, my original, I had two targets. I do it first a 20 pip, and then I came up here to 3,400, 1,3400, that kind of thing. But again, I would have got bought into the trade on this wick, no drawdown, and then boom, straight to the upside. Let's run it. Now, and this is interesting how it ended, because now if I had sharp was, my eyes were sharp, I would have got that and came up here, and we would have got about a 70, we would have got 70 pip. Yeah, call it, it's 68, 69, call it 70 pip move, and still been in profit even with this slight correction, okay? But, and here's the opportunity, and here's the thing that I just look for day in and day out. And this is how, again, I'm, able to practice and get consistent with this day in and day out, because I'm looking for now, well, what did it leave? Everything that goes up fast usually leaves an area of imbalance. So I can look down here and see, okay, price is likely to continue to move in this direction. But we already said on the higher time frame that it's an upward uptrend, and I'm gonna stay with that. So going into next week, I'm looking at two things. Like, I got to switch back over to the dollar for a second. The dollar is, okay, let me run this to the end. Get that out of the way. Let's see where the dollar, all right, so dollar went on, boom, 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 boom. All right. So the dollar should have, okay, so the dollar ended here. We can see that. All right. So I got to look at a couple things. What's the dollar going to do next week? Possibly, and then set my trade ideas with respect to the EURUSD. The dollar is trending down. Okay, and we already said that EURUSD looks as though it's trending up. So just to recap, what I will be looking for next week. I'm not saying it's going to happen Monday or Tuesday, but what I'll be looking for next week, I will be looking for price to continue. It's going to come back down to this area, because again, it has to rebalance, and that's the point of interest for me. This last sell to buy candle, I'm gonna wait for price to come down here, and let me show you. Let me put my fib on it. Just, oops, sorry. I'm gonna put my fib. Boom. I got, yep. I need about an 88% retracement. So I need price to come. Right here. And where's the 88? Where's the 88? If you don't understand the fib, go back to the academy and check out the fibs and the significance of the 88, at least the style of trading that I'm taught at. The 88 is my sweet spot. This is where I want to get into a trade. So this is perfect. This is perfect. Oh, I'm so glad I'm sharing this with y'all, because this is going to make me, I ain't gonna make no income claims, but this is gonna be a real good setup for me next week. So I'm gonna get in right here. I'm gonna get in 50% of this candle. Same thing I did last time, but I'm gonna look now. Oh man, because check this out, and I'm gonna close on this. Check this out. So again, I'm gonna get in here. I'm going to, let me show you something. Let me show you what I'm gonna do. I'm gonna get in on that candle. I'm gonna come back, basically the same thing. I'm come back to the same area. I'm come back to the exact same area. I'm gonna take a 15 pip stop, okay? Because where the 15 pip stop is going to put me at. It's gonna put me right back to this area that has prices already come here. And again, it can move, it can shoot through there, but again, if it does, then I'm out of the trade. But on my analysis, I'm gonna wait for price to come back down to my 88, which is 50% of this last point of interest, this last sell to buy candle. That's the last candle it was selling before it went up. It's going to come back here, and that's like what you call it, retest. This is your retest. So price is going to come back here and retest on my 88, and then boom, a 15 pip stop, and then boom, I'm gonna take it back up here because, and price is going to come back. Actually, price is going to go past here, but I'm a bit conservative, so I'll just take it up to the other point of interest, which is up here, the last buy to sell candle. Get used to looking for those point of interest. These are institutional candles. That's the fake out candle. That's the one at the top and the one at the bottom that pulls that retail trader into this market because they think it's going down, only for it to reverse because retail traders won't look to the left and won't understand what they see when they do look to the left, that there's an area of imbalance here. Price is probably, let's see how price reacts off of that. We saw how it did. It just took it back up to the upside. And like I can see here, it's going to come back down to the 88. When it does, boom, I'm getting in, and I'm gonna ride this up, and let's see what I get out of that. I'm sorry, I got all my little stuff in the way. Okay, so I'm gonna be looking at about 100. Let's call it a 100 pip move. Okay, I'm gonna call it a 100 pip move. So you know, if I do it right, I don't have to trade no more that week. You know, if I do it right, I don't have to trade no more that week. So and I'm gonna close on that. And that's the other thing. And I'll say this for next week. But the other thing, again, from a mindset standpoint, get a trading plan together. When are you going to trade? I don't tell people what to do, but I'll just say it like this. But I'm not telling you what to do. Don't trade all day, every day. Okay, I know you're trying to get that money. I know you're trying to get that money. But when you trade with the educators at the times that they trade, and like I said, it'll be less trading, but you will get more. It's like, what's that? The concept? Doing less and getting more. You won't even understand it, but you'll be getting more consistent results, which then will mean you'll be profiting more on a consistent basis, and you will see those things that you want to see, that we all want to see, which is our accounts grow at X% per trade, per trading session, et cetera, et cetera. Okay. Now, like I said, if you want to trade all day, every day, you can. But just keep in mind, every time you trade, you're just exposing yourself to sometimes unnecessary risk. Because if you've met your goal, if you have a trading plan, if you've met your goal for that particular day, stop, bag it, get ready for the next day. All right, keep your money. Stop putting it back out in the market, exposing it, and then especially when you're new, because like I said, you just don't know what you're doing. And it's not a knock, but that's just the reality. You just don't know what you're doing. So, and again, what we don't know can hurt us. So, no, from the educators, do what they do. They don't trade every day. They don't trade every day. They take 1-2 setups a week sometimes, okay? And they make money. All right, look, I'm sorry, I get preachy there toward the end. But anyways, I hope this was of some value to folks. I'm gonna check the chat real quick to see if I have any questions. Oh, in the meantime, let me put up my contact information. Give me 1 second. I got a file here. I can open it. And then I'm going to remember to share. In a second. I can stop sharing that and share that. Okay. It's coming. Yep, this is me. Okay, you can get at me. Feel free to get at me. Like I said, I'm no way a substitute for your online. I mean your IML educators, but again, I'm here to help. I will help. Sometimes in those sessions you might come away with a few gaps in you learn, or just need to see something demonstrated on the chart that they don't have a chance to get to, or And of course, there's thousands of people on those sessions. Sometimes our comments or questions get overlooked. So that's me, Greg Whitmire. Telephone, Instagram, SavvyTrader1.com, YouTube, SavvyTrader1. You can get at me. So I appreciate it. I'm humbled that you guys are on with me tonight. And I said I was gonna check the chat. Let me check it. I don't think that there was nothing in the chat. How do I even see the daggone chat? Well, excuse me if I didn't, because I can't seem to look. Do I have to stop sharing to see the chat? Oh yeah. Shucks, a whole bunch in the chat. Thanks. You're welcome. Also, oh man, you guys are too kind. Thank you. I definitely want to have a recording. Yep. You can get it on my YouTube channel. The recording. We can't hear you. Okay, that was resolved. Okay. All right. Thank you guys. Thank you. Appreciate it. And good night to everybody. Have a great weekend. Study. Get into the academy and review some of those recordings from the previous week. If you can find, there's a couple people that do Sunday sessions, like market forecast sessions. Lindor Stevenson, Kim Torres come to mind. Find those sessions, plug into them. And again, listen. If you're new, you can't follow all that. Just listen. It will come. Trust me. If I can do it, so can you. All right, guys, I'm out. Y'all have a great evening.
Thanks, Greg.
Okay, you're welcome. Everybody.